So obviously both Visa and MasterCard reported, and they're, reported that the last few weeks of Q1 were really bad. We obviously think that Q2 is going to be pretty bad. And since they reported at the end of the first month of Q2, we're going to assume they will report at somewhere around the end of July. So if we want to get past the earnings time, take a trade on MasterCard to the downside, there's a couple different ways, because obviously you can see these premiums are pretty expensive. In Tastyworks, the percentage in the money is your delta. But say we wanted to take MasterCard trade to the downside, and I don't know what previous resistance was, but let's say 300 was previous resistance. So you can just click on things and change it back and forth. So we're selling a $2.95 call, buying the $300 call for a $2 credit, and we're going to go ahead and buy a 250. This red area is the expected movement. These little lines are standard deviation lines. So we're going to go ahead and buy a 250 and sell a 235 against it. So our total cost is 85 cents. Now we have to have a $500 in our account, but that's not, our account risk is going to be the $500 plus what we paid. So $589. This is the, don't do it. I don't want to go to the other account that has the funds to trade that, but that has the margin. But as you look through the percentage of profitability, percentage of hitting that 250, 40%, extrinsic value is basically this that you can lose. Percentage of getting 50% profitable, which is getting to around 708, is you have about a 63% chance of getting there. Negative delta means it's a bearish trade. This trade has been, over the past several days, making about 18 cents a day. Max loss is 555. Max profit is 415. And so that would be selling a call credit spread to buy a put credit spread, buy a put debit spread.